Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how we can identify our hidden POI, hidden supply zone, demand zone in a structure basis, in a candlestick formation, in a higher time frame, in a lower time frame, and what criteria you should follow before to marking these type of POI, these type of entry zone. So in this chapter, I will explain all these things in a detail. So now let's move on to the chart. So first of all, I'm going to show you through structure basis that how we can identify your hidden or demand zone, supply zone. Before plotting any hidden POI, demand zone and supply zone, you need to understand what is structure right now. You can see market momentum is completely bearish and everything looks bearish. Market creating lower lows, break the previous low. So first of all, you need to understand, mark your structure as well as. So I'm going to start mapping our structure. This is our previous low at this point and this is our lower high, right? And market again push downside because market momentum is completely bearish and market continue breaking a previous low and creating break of structure. So this is our break of structure is here, right? Because market break the previous low. So this one is called break of structure. After this break of structure, what you need to understand here, you need to wait for to taken out the inducement to confirm any lower low because market momentum is a bearish. So where is our lower low in this case? Look at this one. This is our lower low. Why? Because market taken out the inducement. So where is inducement? Here, right? So when market taken out the inducement, our lower low is a confirm here. Again, when market trying to push upside to taken out the inducement to tap on your extreme POI, and then again market push downside and break this low. If market again break this low, so this one is also called break of structure because market continue pushing on downside. So this one is a break of structure. After this break of structure, where is our lower high? Because lower high only confirm when market create a break of structure, right? So in this case, where is our lower high? This point. Why? Because this is our highest point after break this one in this line, right? So right now this structure looks like this. Again, what happened here? Look at this one. Market push downside and close below it. So when market close below it, so this become our valid break of structure. If not close, just taken out the liquidity. So this is a not pause. This is just liquidity grab. This one is a, or you can say external liquidity grab, right? And then market taken out the inducement and then market can be pushed again downside to confirm a next attempt a break of structure, maybe a reversal to the upside. So it's depend on situation. But right now, this one is a valid break of structure, market push downside and this candle close below it, right? And you have to identify where is our inducement because we are waiting to confirm or to create a lower low right now. Okay, so this point is our lower low. Why? Because this one is a pullback, market taken out this pullback and then market push downside. So what happened here? You have to wait for it to break off structure. So break off structure only confirm when market break this low and candle close below it. So this point market also close below it. So this point become also a valid break of structure. Where is our lower high in this case? Look at this one. This point become our lower high, right? So this is the overall structure in a bearish market and this process will be applicable or continue. Here you can see market push downside and this point become our lower low at this point, right? Where is our inducement in this case? This point, this is the first pullback because this candle broke the previous candle high. This one is the inducement and again you have to wait for it to sell. When you are looking for sell, you are looking for sell on after taking out the inducement or tap on your extreme POI, right? So where is extreme? This point. This is the extreme. Market mitigate this one and push downside but not able to push or break this low. Market again go higher and break this main high, this one right here. Okay, so what happened here? When market break this high is here. So where is our structure? This is lower low or this is a lower low? This is a question here. So in this case, basically what happened? In this case, lower lows and lower high will be transferred. Why? Because main high is a sweep here, right? If you are trying to structure something like this, okay, like this, okay, then again push downside. So this is not a valid way to marking a lower low structure, something like this, right? So what happened here? In this case, this high is broken by this move, okay? So this high transfer here to here, okay? And this low will be transfer here to here. This move will be high. This high transfer here to here, something like this. And this is important for you if you are if you are facing any kind of problem to identifying structure, right? So this high transfer here to here, okay, and this point become our lower low, and this was is not valid here, and this low also transfer here to here, something like this. Okay, and where is inducement? Inducement also will be transfer in a first attempt. You can see this is the inducement, but this inducement transfer here to here. This is minor inducement here. Okay, so inducement, lower lows, lower high, everything will be transferred. Okay, so where is our next boss? Next boss will be transferred after break this one. If market break this low and candle close below it, so this become our valid break of structure. Otherwise, what happened here? You can see market break this low, just grab this liquidity. In this case, what is this? This is just liquidity grab. It means external liquidity grab here, and you can buy here, right? You can buy here and till at least market taken out the first pullback, this one. Why? Because market can be again pushed downside. Okay, and market can be pushed downside and candle close below it. If candle close below it, right, so this break of structure will be valid here. Right now this is a not break of structure, this is just liquidity grab. So I will indicate something like this. This is just liquidity grab here, this is a not structure complete here. Okay, short term you can buy or sell here based on lower time frame. So this was a process to marking the structure. Now point is here that how we can plot your hidden POI, demand and supply zone, everything. Okay, now I'm going to show you from top of the move here. Okay, so this was our break of structure. After break of structure, you can see what criteria you should follow before to marking like a inducement. Okay, inducement, to marking any inducement, first thing, those inducement must be a valid pullback, right? What it means must be breaking the previous candle high or low, as I explained in ebook and video chapter everywhere. Okay, so in this case, where is our inducement? In this case, first pullback is here, which is taken out. So this is an inducement. If market taken out the inducement, our low is a confirm here. So basically we are trying to buy or sell after taking out the inducement. So this inducement is taken out. Generally we are looking here for sell. Where if inducement sweep here, we are selling here. Either if market taken out the inducement and tap on your recent unmitigated order block. So where is our unmitigated order block in this case? This one, and sell here. Okay, but what happened here? Look at this one. Why this price move up? Okay, which is fine. Okay, why? Because maybe market to tap on your extreme point. This is additional. Okay, but sometime what happened? Price not tap on your extreme point after taking out the inducement, and then market went down and went up as per our plan, but not mitigate your extreme POI. Okay, and we miss a trade. So in this case, what happened here? Look at this one. What is this? This one is a valid pullback is here. Look at this one. This is a valid pullback here, and this is a valid pullback here. First entry possible here because this is an inducement sweep here, and maybe here you got a break even, maybe stop loss, anything can be happen here. Okay, and next thing is here. This is a next pullback here. Okay, so at this point, why this price taken out this one and went down? Look at this one. This pullback high is here. If you draw this one and extend something like this, you can see what happened here. This one, what is this? This one is called hidden a POI, hidden a supply zone. You can see why this high is a sweep here. When the previous high low a sweep here, this and those create a hidden a POI. And when market take a pullback and mitigate those zone, you can definitely buy or sell. It doesn't matter where is market going on. Okay, and which level market sweep high or low, it doesn't matter. Okay, if market create these type of situation, definitely you will get a reaction at this point. Sometime maybe got a small reaction, and sometime you get a major reaction, because it's depend on structure direction. So this one is our become our hidden supply zone, right? You have to identify the previous pullback is here and draw something like this. And when you switch here in a lower time frame, like this is a 1 hour time frame, when you switch in a 5-minute time frame, then you will see unmitigated shadow, unmitigated order block in this zone, right? This is the first scenario when you get when you can mark your hidden POI, demand or supply zone. This is a larger range, right? And sometimes you will see a very small, very tiny demand or supply zone. In that case, how you can deal, I will show you exactly in the next way. Okay, so this one is our first scenario. You can plot something like this. I will show you in a lower time frame also. Now I'm going to switch here in a 5-minute time frame to show you exactly that how you can deal in this situation. First of all, now you have to switch here in a 5-minute structure. In this case, you can see this is our zone here, right? So basically this is our zone. It means we can trade here. Okay, so you have to wait for it to mitigate this zone at least. Look at this one, right? So if price type here you can trade here, but put the stop loss just of it. And second thing is here, this is a larger range, okay, there's a higher time frame range. And second thing is here, if you want to take additional confirmation, so you have to wait for it to mitigate this one, or create chalk, flip, or anything, you can take entry. And second thing is here, if this structure also sweep here and create any hidden supply zone, you can also sell here. So this is a 3 way to sell here, like chalk, flip, and third thing is hidden POI or supply zone, right? So let's see what happened next here after this one. In this situation, we can trade in a 2 types of way. First one is here, if you want to refine into lower time frame, like this is a higher time frame zone. If you want to look here in a 5-minute order block, this one is here, right? So this one is our 5-minute order block at this point. So here, if price came back this level right here and create any single candle order block, you can trade here. You don't need to wait for chalk, flip, or anything, right? This is the first way when you can trade. Also, if you want to take a direct entry at this point, because this is a larger range, right? But this is not a good way, because this is a very larger and very big stop loss. Okay, so in this case, you can wait for chalk or flip. Okay, either wait for to mitigate this unmitigated filter, or you can say refinement order block. Okay, so if market break this low, this one is a chalk. Okay, because price tap on your higher time frame supply zone and create anything here, then you can sell here. Also, if market sweep the previous structure is here, then you don't need to wait for inducement. You can directly sell here, as you know, right? So let's see what happened next after this one, and then what we can expect here. Market break this low. What is this? This one is called chalk. This is our chalk. And after chalk, where is our inducement? Inducement, this one is our inducement. Why? Because market break this one and create a pullback, and after this, where is our area when we can sell? This one, right? If market came back this zone, definitely you can sell here, because this is our area when we are looking for sell, because price tap on your hidden higher time frame supply zone, right? So let's see what happened next after this one. Okay, all right, market break this one and our inducement will be transferred here to here, as you know, because market break this low, and our still this area is still valid here for the sell. Okay, so if you are trying to sell here, definitely you can sell here and put the stop loss just above it. And where is our target? Our target is a main low. This one is our main extreme target at this point, right? And also one more thing, if you want to take additional confirmation, right? If you are afraid to sell here at this point, then you can take additional confirmation in terms of the candlestick sweep. Also, you can take a single candle order block as well as, right? Because this is a lower time frame refinement order block. Okay, so let's see what happened next after this one. Okay, so finally market mitigate your unmitigated order block at this point. Simply how you can deal in this situation, look at this one. This is an interesting point at this point. Okay, here you can see the previous structure was here and sweep by this move, right? And this one is also called hidden zone. This one is also hidden zone in a lower time frame. In this case also you can sell at this point, right? You don't need to switch another lower time frame, because we are already in a lower time frame. For the safety purpose, you can put the stop loss just over it, and also you can put the stop loss just over it. I'm just and target will be same. First target is here, because this is a first pullback is here, right? And main target, as you know, the major higher time frame main low H1. So if price came back this zone, definitely you can sell here. Also, if you are now more aggressive, if you want to take additional entry, so you can sell on this single candle order block. Why? Because this candle grab the liquidity, push downside, and next candle cover down, and here market create single candle order block. So if you want to sell here, then you can sell here, but put the stop loss just for it. But in this case, your stop loss will be larger and risk reward will be decreased. But advantage is here, your entry will be executed here, but this entry is a less chances that, because this is extreme. But if this entry is executed here, then you will get very high risk reward, right? So you need to understand pros and cons in a single candle order block and hidden POI supply zone, because extreme always give you big high risk reward. Okay, but main problem is here, sometime market not execute your order. Okay, so let's see what happened next here after this one. Okay, so now let's see what happened next here. If market execute this order, your stop loss will above it, and this is a very tight stop loss. But if you wanna little bit safer stop loss, so this will be our safer stop loss, as I mentioned. Okay, because this is a very tight stop loss. And second thing here, if you wanna take entry here, this is a single candle order block entry, right? Because this structure sweep the liquidity and tap on your extreme unmitigated order block. Okay, so let's see what happened next here. Okay, all right. Okay, so this entry execute at this point. Okay, and let's see what happened next here. Market hit our stop loss in this case. So why? Because this is our very tight stop loss, but this was our entry as per our plan. Okay, because sometime market grab the liquidity and then again market grab those low or high and create strong zone for the buy and sell, right? So in this case, same thing happen here. What happened here? This pullback grab the liquidity here. What is this? This liquidity is a grab here and create another hidden POI for the sell, and market create another hidden POI for the sell at this point. And where is stop loss? Just above it, as you know, and safer stop loss just above it. So in this case, there is a no big range like this one and this one. So I will suggest you to put the stop loss just above it because there is a not a larger stop loss, right? And if you wish to reduce risk, you can also put the stop loss just above it. Okay, so let's see what happened next after this one and what we can expect here. So this was our loss here, first loss here, and the next attempt market just sweep the liquidity. Let's see what happened next here. Next candle mitigate this one, right? Again market push downside. Okay, all right, trying to push downside. Okay, in this case you can say this is a micro structure is here. Look at this one. This is important for you to scale a lot of opportunity when market tap on your higher time frame POI, and then how you can scale multiple position. In this case, you can see what happened here. Structure, something like this, push downside. Okay, so what happened here? This structure grabbed the liquidity. It means this one is also called hidden POI, demand zone and supply zone, right? In terms of the lower time frame structure. So this one is our previous high, is a grab the liquidity, and this is a zone. And this is a zone when you are looking for the sell. But remember one more thing. This is a additional here, this is a refinement, but where is the stop loss above it? Okay, and second thing is here, if you wanna take a additional confirmation for the sell, so you can wait for to mitigate this one and create a single candle order block, you can take entry. Second thing is here, if you want to take entry, you can also take here entry because this is an unmitigated order block, but you have to put the stop loss just above it, right? Sometime what happened here, you mark this order block at this point, market mitigate this order block, market mitigate this order block, you put the stop loss just above it, and then what happened here? Look at this one, market push upside, give reaction sometime, and then push down upside, something like this, to collect your stop loss and then push downside. But you are enter here based on order block, everything was perfect, but market hit your stop loss. Because order block is not means that you have to take entry, buy or sell every time on order block. Order block also act like a SMT, as you know, right? So you can take entry here, but you have to put the stop loss just above it, above this high, which will be safer side, right? So this is a possible entry here. Let's see what happened next after this one. All right, so let's see. Okay, perfect. This order block is mitigate here. All right, you can see this hidden supply zone also a mitigate here. Also, if you want to take additional confirmation here, you can wait for single candle order block for the entry. So if price create here anything, definitely you can enter here for the sell. This one, look at this one, this is a single candle order block here, right? And again you can sell here on this order block. Let me mark this one because this is a valid entry for the sell. Also market sweep the structure, this one, and put the stop loss just above it for the safer side. And now let's see what happened next after this one. All right, market push downside, continue pushing downside, and when market break this low, you can take a partial at this point, right? So let's see what happened next here. All right, market break this low, you can take a partial here and the final target at this point, right? So this is our final target. Why I'm showing so many possible entry? Because sometimes you miss first entry, second entry, then you can catch next entry, right? That's why now you can understand that how many possible entries here based on higher time frame and lower time frame, hidden POI, hidden order block for the buy and sell. Right now I'm going to switch here again in a 1 hour time frame. Okay, so let's see what happening here. Market push downside and break this low, and this is a break of structure because market momentum was bearish and all market hit TP here. Possible you can got 1 or 2 stop loss, but these was perfect as per our plan. Okay, but rest trade can give you big return here. Okay, and this process will be applicable here every time frame and every market, everywhere you can trade. Okay, same thing happen here after this move here, break this structure, taken out the inducement, and after taking out the inducement, market create hidden a POI, right here, right? Market create hidden POI, something like this, push downside and mitigate this one and push downside. Again, when you switch here in a 5-minute time frame, then you will see a 5-minute unmitigated order block or maybe chalk flip or anything here. Okay, now I'm going to show you one more thing. Look at this one picture here very carefully. Look at this one. What happened here? This was our hidden supply zone right here. Okay, price step here, mitigate this point, and then what happened here? Look at this one carefully. This was our unmitigated order block at this point right here. This was our unmitigated order block at this point, and then what happened here? Market tap here and then create single candle order block, the create a previous candle high sweep here. You can also sell at this point. I'm going to show you exactly at this point, right? Because this candle grab the previous candle high liquidity, push downside, and next candle open here. Let me show you here in a detail. This is important for you while you are trading here. This candle taken out the liquidity and mitigate your 5-minute POI, and these things applicable when price tap on higher time frame POI, lower time frame POI. Then you should apply these things in a candlestick formation, right? Tap here, liquidity grab, push downside, and this entire shadow act like a POI, as you know, right? The next candle open here because this shadow act like a POI. Next candle open here, mitigate this one and put the stop loss just above it and target. Where is target? Target also H1 main low. Where is low? This point, right? This is a main low right here. So this is your target, and same process will be applicable at this point. If you can see here, same thing happen here also in a chalk formation. This was our previous structure right here. The previous low is a break here, chalk, and this is an entire candle act like a POI. You can sell here, right? Again break this low and you need again inducement before the enter here. Same thing happen here, market break this low and create break of structure, taken out the inducement. After taken out the inducement, market must be tap on your unmitigated order block. This was our first unmitigated order block, but if you are afraid to sell here because after taking out the inducement, maybe market can go again little bit higher. So in this situation, how you can deal? First of all, you have to identify there is any hidden POI supply zone or not. Look at this one. In a candlestick formation, this one is a mitigate here. There is no hidden POI supply zone or anything. Okay. So first pullback is taken out. It means this is a inducement. After inducement is a first order block. Okay. For example, this high is a grab this pullback. So again push downside. So this area become our hidden supply zone. If price tap here and create a single candle order block, you can sell here. Also, if price mitigate your unmitigated order block, you can also take entry, but you need a create single candle order block. Which one is here? Same thing happen here. This is not a liquidity sweep, right? This is just single candle order block because the previous candle high is a broken and candle close over it. So if candle close over it, next candle must be close below it. So this one is a close below it, and then third candle mitigate and then sell. So this is a entry for the sell, right? So this is a perfect entry for the sell at this point. And where is target? Stop loss just above it and target are similar. H1 main low, this one. Perfect, right? And same process will be applicable here if market grab the previous candle high liquidity at this point. This is important. Okay, so when price create this one, this type of entry, again you have to wait for it to be taken out the previous candle high as a liquidity. Look at this one, previous candle high liquidity grab here. This entire shadow act like a POI. Look at this one at this point, right? But in this case, you have to put the stop loss just of it high, okay? Because market can be a little bit more higher, right? Because you have no idea if market can go higher, then your stop loss will be hit, okay? So same thing happen here. So if you are miss this trade, again you can see liquidity grab here. This is the entry. So this is a possible hidden POI supply zone in higher time frame, in a lower time frame, during execution, during marking a POI. So you can use in a structure formation, in a candlestick formation, everywhere you can trade using higher time frame, H1 15 minute, 1 hour, 4 hour daily, every time frame. Okay, and this process you can see everywhere in every market. Okay, so thank you so much watching the entire episode. I hope you understand that how we can plot our hidden POI supply zone in a higher time frame, in a lower time frame, and what criteria you should follow. I hope I can understand that this can be a little bit different and this can be a little bit typical for you to understand thing, but once you watch multiple times this chapter, definitely this will help you a lot. Once you understand these things in a structure formation, in a candlestick formation, this can be a game changer during entry, during marking your POI zone. Thank you so much watching the entire session, and thank you so much watching the entire episode. I will see you soon. Happy trading.